Hi everybody, welcome to another monthly market outlook by Atlas Wealth Management. For more information on our services, please go to our website at atlasbuildswealth.com. We also have some articles, and you could also download a free retirement calculator. Hi everybody, this is Ron Lang with Atlas Wealth. We're going to be doing our December S&P review. We're going to be doing our market leader review. We're going to try and figure out here the direction of the market and the contributing factors. Well, as everybody knows, and those of you that have been receiving our Atlas reports, the fiscal cliff is not resolved yet. We've been talking about this ad nauseum for about 3 or 4 months for those of you that have been following. One of the things that we see here is that we're going to be range bound. The market has been pretty resilient since the beginning of the week of Thanksgiving, and we've been pretty much on a straight line up. Hit the 50-day moving average, bounce back up again. And one of the things that we're looking for here is just some more range bound action. Through some of the forecasts that we have done, we have basically said that if there is a good fiscal cliff resolution, meaning not just a mini bargain, but a grand bargain, we're probably looking at least a 5 to 10, maybe even a 10 to 15% rise in the S&P over the next 3 months of the year. The first 3 months of 2013. So that means if we get something within the next 2 weeks, the last day Congress meets is December 14th. Not that anything can't be done after that. We're probably looking at 1475 to the 1500 level by the end of this month. If we are just nowhere by Christmas, and it looks like that it's not going to happen this month, this year, we could easily see a sell-off to the 1321 level, maybe even a 1300 level before the end of December. So one of the things that we're advising the people that if there are investments that you want to be in, then maybe you want to lighten your positions. If you're in losers, get out of the losers. But also there is no problem with being in cash. There really isn't any problem with being in cash. And one of the reasons why there isn't a problem with being in cash is just because you're not going to make money, you're not going to lose money, but there's less emotion involved for you, and it might be something that you can handle a lot better. So again, there's nothing wrong with staying in cash. Okay, so let's look at our market leaders quickly. Apple, as you can see, kind of bottomed out here around 500. There really was no specific support level that it bounced off of, other than it was probably just pure exhaustion. People taking profits, knowing that the fiscal cliff was coming, locking in those profits at the current year rate, and it just bounced up. Basically, we're looking for Apple to meander for a little bit to the $600 level, but we still believe it's a $700 stock over the next couple of years plus. Looking at ExxonMobil. ExxonMobil has had the pullback with the rest of the market. We think it'll trade between 85 and 90, at least for the balance of this year. Microsoft has fallen off. We came down to this pretty strong demand level here, of which it basically has just kind of meandered and been range bound since then. We don't think that Microsoft will see a significant pickup unless there's a lot of positive news about their new Surface sales. Walmart had a terrific Thanksgiving, and you could see it's pretty much been on a tear. We're looking at an immediate target here of around $72.50. Could go as high as $75 with a fiscal cliff resolution. IBM has kind of fallen from grace a little bit from the $210 highs. We still believe that IBM is a terrific stock, a great future. They've had great guidance. This is one of those stocks that if you're in, you might want to lighten the position. This might be range bound for a while with a fiscal cliff resolution. You might see it go as high as $200. AT&T, in full disclosure, I am long this stock. Basically, you can see it's been pretty much range bound here. This is a terrific dividend play. This is something that you might want to add before the end of the year while it's still pretty low, because with a fiscal cliff resolution, we could see a pop up to the $36 level pretty quickly in either late December or January or higher. Again, going into next year, people are going to be looking for really good dividend plays. AT&T is certainly going to be one of those stocks people are going to look into. GE has performed well along with the rest of the market over the last couple of weeks. Decent dividend yield. We still look at this being range bound between $20.50 and $22. Chevron, very similar to ExxonMobil, has basically been on a downslope here. We still believe the upper end is probably about 107, 108, downside maybe about 100. Google actually has been on a terrific run and has bucked some of the hiccups in the market. There's no reason why the stock should have been down at the 640, 650 level anyway. We believe that it was just kind of a sell-off with the rest of the market. This is still a $740, $750 stock. We expect it to get back up to that level by January. Procter & Gamble. Procter & Gamble is still a terrific stock. All consumable items, keep eating them. Basically, what we're looking at here is this to be range bound between $68 and $71 over the next 60 days or so. Coca-Cola. Coca-Cola actually surprised me. I didn't think it was going to be down as much as it has been. Basically, we're waiting for a breakout here above the $38 level. One of the things that we're looking at is, without a fiscal cliff resolution, we expect to pull back here to 36, 36.50 level. With a resolution, $39 to $40. McDonald's has not been getting any love by the markets, despite it's got a great balance sheet. Had very good up volume on Friday. One of the things that we're looking at here is with a fiscal cliff resolution, we think this thing will shoot up to $92, $93 without a problem. Without a fiscal cliff resolution, we don't think the pullback will be as much, probably to the $83, $84 level. This is one of those really good stocks that if you want to hold on to it, you might want to just lighten your position. With Superstorm Sandy, Home Depot has done pretty good. And you could see it's just been, even if we went to a weekly chart here, this has just been on a steady upslope. A lot of analysts I hear like this as high as 68 to 70. We don't see any reason why it shouldn't go as high as that. But if there is a pullback here, you're looking at about the $58, $59 level. And one of the pullbacks before the end of the year would probably just because people want to lock in profits after such a terrific run. Caterpillar has just been kind of stuck in the bud, no pun intended. We believe that this had a target of around $100 based upon its measured move over the last really 12 months. And as you can see, it just hasn't been able to break out of this range. And we believe the bottom of this range is $78, $79 if there is no fiscal cliff, and the upper end is probably 90 to 95 by the end of December. The transportation index, which we always like to look at to help lead us, as you can see, has been struggling a bit. This is not a good sign for the Dow theorists out there, but one of the things that you might want to see is that if we do get a fiscal cliff resolution and we bust through this 5263 area before the end of December and it's leading the S&P, you could see this thing go up to the $54, $5,500 level very quickly. And if that happens, you can expect probably at least that 10 to 15% gain in the S&P. If you'd like to receive our Atlas market reports twice a month, you can go to our website at atlasbuildswealth.com. Go to our Contact Us and just request it. We'll put you on that email list. Hope everybody has a great day and enjoy the holidays. Thank you for attending another monthly market outlook video by Atlas Wealth Management. Visit our website at atlasbuildswealth.com for more articles and also other event dates. Thank you for attending.